Hi there, I'm Tiffany Williams from the Guyana Revenue Authority. This week we focus on capital gains. We'll explain why a portion of the profits or gains from selling an asset may be taxed, the capital gains tax computations, and we'll tell you about the documents required when submitting a capital gains tax return. This is Focus on GRA. The Guyana Revenue Authority has reintroduced its tax sites to ensure you file your tax returns on time. Beginning April 4, 2022 up until April 29, 2022, excluding holidays and weekends, tax sites will be at the Gifflin Mall, East Coast Demerara, Amazonia Mall, East Bank Demerara, and GRA offices on Camp Street, the Guyana Post Office, Rob Street entrance, and the Licensed Revenue Office Railway Embankment. Officers will be at the Gifflin Mall and Amazonia Mall from 10 a.m. to 4 p.m. Mondays to Thursdays and up to 3 p.m. on Fridays. Drop boxes will also be available at the GRA's headquarters, GPO, Rob Street, and LRO Railway Embankment, normal working hours. GRA officers will not be issuing lodgement receipts, but they will be verifying that tax returns are properly completed before being submitted into drop boxes at these locations. Remember, it is your legal obligation to submit your individual income, individual property, company property, capital gains, and corporation property tax returns and make any outstanding tax payments on or before April 30, 2022. The tax sites are for persons who wish to manually submit their tax returns. Persons outside of Georgetown are encouraged to submit their tax returns at their nearest integrated regional tax office. Remember, these tax sites will be in operation from April 4 to April 29, 2022. GRA, your partner in development. Welcome to Focus on GRA, a program of information for taxpayer education. If you sold or transferred assets in 2021, such as a car or a house, or maybe you shut down and sold your business, or negotiated a business merger and made a financial gain in the process, tax may be due on a portion of the gain called the net capital. We've invited Assistant Commissioner in Compliance and Enforcement, Melissa Romeo, to explain further, as the deadline for submitting capital gains tax returns is April 30.
When disposing of an asset, whether movable or immovable, you will be required to pay capital gains tax to the Guyana Revenue Authority if you make a gain on disposal. This category of tax is administered under the Capital Gain Tax Act, Chapter 8120. But what exactly is capital gains tax and how is it charged? Ms. Melissa Romeo, Assistant Commissioner, tells us more.
Capital gains tax arises from computing the tax on a gain, and such gain arises from change of ownership of a property, meaning transferring it from themselves to someone else or selling it to someone else. So the tax arises from the gain incurred from that transaction.
Therefore, if an individual acquires a property for $2 million and they are disposing of it for $3 million, the difference of $1 million will be the gain on the transaction. This amount will attract capital gains tax at the rate of 20%, and this is in keeping with Section 12 of the Capital Gains Tax Act. You can also make a loss from the disposal of an asset. A loss will arise where an asset is sold for less than the cost for which it was acquired. There are also instances where capital gains tax will not be applicable. Ms. Romeo highlights some of these instances.
There are certain provisions by law where capital gains tax is not applicable. And one of the main one, I must say, is where the property or where the person owns the property for over 25 years. So that means that if you bought a property since 1996 in your name, mind you, and you own that property since then and you come to dispose of it now, by any means it doesn't attract any capital gains tax because we recognize that you would have owned it for over 25 years. We also have those cases or those transactions where persons may own the property for just a couple of years, but they're coming to transfer it. For example, if they come to transfer it to their spouse or any other person, they come to transfer it and that property will be remaining jointly with that person, no capital gains tax is attracted there. Also, if that person is transferring the property to someone and they are remaining with life interest in that property, you have no capital gains tax arising out of that transaction. You have cases where recently, a couple of years ago, the law was revised to include if someone is disposing of their private property and they are about to acquire another one within the same period or the same year of assessment, no capital gains tax would be attracted to the transaction for the sale, providing that the person provides some kind of justification to us that yes, indeed, they're going to purchase another property using the same funds from that transaction. You also have the case where the capital gains ceiling is $500,000. When I say ceiling, I mean, for example, if you acquired the acquisition cost for this property, this land is $1 million, and you're disposing it at a value of 1.5, you have a difference in gain of 500,000. So because that gain is 500,000, and based on the provision outlined in the legislation, if the gain does not surpass 500,000, you should not attract it. It would not attract any tax.
It is important to note that the $500,000 is a ceiling and not a deduction or an allowance. As such, once the gain exceeds $500,000, the 20% must be applied to the entire amount. The due date for the payment and submission of the capital gains tax return is April 30th.
In arriving at the net capital gain, there are a few expenses related to the asset that can be claimed. A tax specialist from the tax advisory section joins us now to explain further.
Welcome to Your Question in Focus. Joining me today is Ms. Desmond Bess from the Tax Advisory Services section. Ms. Bess, welcome.
Thank you.
Today, we will be addressing questions as it relates to capital gains tax. Our questions today are from Ms. Brown, and she would like to know what are some ways in which capital gain tax may arise or be charged.
In accordance with the Capital Gains Tax Act, Chapter 8120, capital gains tax shall be charged on the following: the change of ownership of any property which was done by sale, disposal, transfer, realization, or exchange, or in any other manner. The structure or relinquishment of any rights in any property other than the surrender of a life insurance policy. The transfer of some of the rights in any property other than the transfer of the rights of a trustee in any property subject to that trust. The redemption of any shares, debentures, or any obligations. The dissolution of a business or the liquidation of a company, or the formation of a company.
She would also like to know what are the expenses that will be taken into consideration when computing the capital gains tax when an individual disposes of a property.
The following deductions will be allowed when computing capital gains tax. The expenditure other than the purchase price, if any, incurred solely in connection with the acquisition of a property by the owner immediately before the occurrence of such change of ownership. Any expenditure incurred by the owner making improvement, additions, and alteration to the property, or expenditure incurred by the owner solely in connection with the change of ownership.
Thank you, Ms. Desmond Bess, for answering the questions that were asked by Ms. Brown.
Every person subject to capital gains tax must submit to the Commissioner General a return on or before the prescribed date each year. We'd now like to tell you about the documents required and show you how to submit a capital gains tax return.
Filing for capital gains tax can be done electronically using GRA's e-services platform or manually by downloading the fillable PDF form. Submission via e-services requires the taxpayer to have an e-services account. Learn how to register by checking out GRA's YouTube video titled Signing Up for E-Services. Once an e-services account is active, the taxpayer must proceed to the e-services site, enter their login details, and select File a Return in the Returns drop box. Capital gains are declared under the Income Details section in the line item Net Capital Gains Deemed Income. Taxpayers filing manually can download and fill the fillable PDF form. This form is available on the GRA's website, gra.gov.gy. In the Forms section, click on either Common Forms or Tax Operations and Services in the submenu to the left, and you will see all the forms displayed in alphabetical order. Search for Capital Gains Tax Return and click on the link to download the form. The form is in the fillable PDF format. Therefore, your computer must have Adobe Reader installed in order to open it. After opening the form, you will be required to fill in the necessary information, such as year of assessment, TIN, name and address. If you are submitting an amended return, ensure that you check the box. The summary of transactions require that you declare the net gain of one or more of the following transactions during 2021: change of ownership, surrender or transfer of a right in a property, redemption of shares and debentures, formation, dissolution, liquidation, amalgamation, or merger of a company, sale of household furniture, jewelry, and works of art, commission or reward in the promotion of a transaction without being part of it, other net gains not listed in the above, the net capital gain, and the summary of the deductible expenditure. Line 16 to 18 requires that you enter the net chargeable capital gain, the rate of tax in percentage, and the total tax payable. Lastly, the taxpayer is required to enter their name, signature, date, and whether they are filing as a proprietor, director, manager, secretary, or office holder.
And that's all for this week's Focus on GRA. For more information on property tax, visit our website at gra.gov.gy. You can send us your inquiries via email grapublicrelations@gmail.com. Don't forget to follow us on our social media pages for up-to-date tax-related information. Thank you for watching. I'm Tiffany Odias. Stay safe, everyone.